Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 16th of November. It's been a generally positive week for markets. Obviously started on Monday with confirmation of Joe Biden becoming president and the likelihood of split power within US government also helping investor sentiment. And then of course same day we had the announcement from Pfizer about the potential vaccine, which really sent stocks off to the stars. There's been something of a relapse as the week has gone on. The investor sentiment has been a bit more measured about the rollout and passing regulatory hurdles in terms of the vaccine, which clearly is going to take a few months yet. And that's been underlined by the fact that the likes of Detroit and Chicago in the States have imposed further restrictions, and that California has just joined Texas in reporting over 1 million cases of COVID-19. Nonetheless, on the week as a whole, it's been a pretty positive set of moves. The Dow Jones in the year to date is now up by 1.9%, the S&P 500 up by 9.5%, Nasdaq still strongly ahead, up 30.5%, and the FTSE 100 is down 16% in the year to date, but has actually had a very good week. Some of that could spill into next week. The reasons for the FTSE strength have been mainly driven by the constituents of the index. So we've seen something of a recovery in the oil price. Obviously we had the oil majors in the index, even the banks, on the basis that the post-pandemic economic environment could well improve. So turning into next week, it's likely that we're going to see markets pretty much affected by any further developments in terms of the vaccine release and when it might become practical to expect that it's going to be rolled out to the global population. In terms of company numbers, we're going to have half-year results from Vodafone. This is a stock which has been under the cosh. It's down about 20% in the year to date. A few things to look out for. Dividend yield of 7%, particularly punchy given the current interest rate backdrop. Also, whether there's been an ongoing impact on its roaming charges income. Obviously there's rather less international travel, and whether data usage continues to rise, especially on the recent rollout of 5G. Also full year numbers from easyJet. Needless to say, this is another stock which has had a tough time. Shares down 49% year to date. It previously had guided to a full year loss of somewhere around £845 million, so we'll see if that comes to fruition, as indeed the previously guided number of the cash burn, which was running at around £700 million. So with winter looking at something like 25% of its normal capacity, it may be tough to find too much good news in the easyJet announcement. Finally, Kingfisher, the owner of B&Q and Screwfix, has got a trading update. When we last heard from them, the transformation plan was coming on apace. It'll be interesting to see whether the B&Q Screwfix thing is now going to continue. It's actually a stock which took something of a tumble on the otherwise positive day on Monday, on the simple basis that obviously working from home might be rather lessened, and therefore the likelihood of home improvements. Also, we'll be looking out for an update on its click and collect service, which at the last statement was accounting for around 90% of its online orders. Shares nonetheless have had a pretty good year. They're up 35% in the year to date. Thank you for watching. Have a great week.